All right. Well, the last question I want to ask is this idea of the elections. All right, and
Yeah.
I'll always take advantage of speaking to an American because it seems so exciting to be talking to someone in Rome while all the Rome stuff is going on. So I'm curious. So September, October, November, December. Let's say to November, things are going to start ramping up election season wise,
Mhm.
and the volatility might be pretty intense. I mean, if it's going to match what the rhetoric is like, I can't even imagine because all they're not only this is not um, Bush and Gore talking. This is like their economic policies are massively different, but they're all massively different with fiscal spending in different domains, right? And so, if you're talking about the protectionism and tariffs and all that stuff that the right is talking about versus the letting in more immigration and more funding to federal government from the Green New Deal and all that stuff from the left, does that change? Will whoever gets elected cause you to pay attention to those sectors that that their economic policies will target, or will you stay with, let's say, the Nasdaq?
Uh, I've thought about that approach in the past, particularly after Trump won the presidency in 2016 and there was a massive surge in all kinds of sectors that I hadn't anticipated. It made me realize there are some very interesting strategic plays to prepare the moments before, or not moments, but like from a strategy perspective, you would have it all prepared weeks in advance, and you would have a, if Trump wins, here's what I'm going to do. If Biden wins, here's what I'm going to do, and you'd have all your trades ready to go. That type of approach is pretty tough in my mind. Those are hard calls to make for me personally. Since I'm more interested in price action and the technicals of markets, I'm always going to just trade the trend, and wherever that trend goes is where I'm going to follow. That said, there is there are increasingly interesting opportunities that people present, analysis that gets presented, and sometimes I'll take some fairly small bets on those kinds of things. If I see anything that's compelling enough, I might head in that direction. One market that I'm finding increasingly interesting are the event-based markets or the prediction markets like Polymarket or even the CME's event contracts. Those are interesting opportunities to play sort of a binary choice. It's either this or that, and uh, the risk is fairly fixed. The risk is fairly low, and the reward can be pretty enticing. So I think those markets are likely what I might consider to start placing a bet there now, well in advance of something like this happening, and continue to establish that bet or add to that bet. But from a trading perspective, I just think it's tougher to find the right stocks that are going to be impacted by the presidency than I'm currently capable of, and that's not a home run play for me.
I understand that. Okay, fair enough. For me, the only play there is that the likelihood of, well, I don't know about this because what Powell said the other day about inflation, he says, look, the labor market is not showing that that it's cooling to a degree that we don't believe that any fiscal stimulus, I'm paraphrasing, any fiscal stimulus can actually cause an next bout of inflation. And if that's true, and the new fiscal spending comes in, and the cutting rates and the wealth effect kicks in, we're going to see. I mean, even more of a divergence between the rich and the poor, but which means invest in high beta assets, crypto, Nasdaq, all that stuff, and ride that to the moon. But if it does kick off inflation, then we're going to have a higher high in inflation likely, and then you want to be short bonds, like the short bond trade, the hedge with the with tech, like that to me seems like I wouldn't be long crypto. Like I thought inflation was going to go back to higher highs. Like I would definitely not be doing that, and so I'm like super nervous about which uh, I'm nervous about when the election gets resolved because I go one way or another, it's going to be fiscal spending, and if that is stimulative to the labor market, real problems. And there's this debate whether the amount of immigration that's happening with it, and the same problem is happening here in Canada. The amount of immigration that's coming into the countries makes it so that there's actually less slack within the labor force than we think, which then could cause a bidding war for middle or high tier jobs, and then you can have this inflation thing that starts off. And I don't know that I could suffer inflation twice as high as it was recently.
Hmm.
Like that's my life changes dramatically. Like
Yeah.
I mean, the amount of going over the bills of what I've spent over the last 5 years was versus the 5 years before that. I mean, unbelievably higher.
Yeah.
And so all my decisions have to be different. I have to take way more risky bets in order to try to get the funds that I need in order to survive the next 10 years if we're going to get to 11%, 13% inflation rate. I mean, that's what scares the heck out of me with the resolution of the election.
Sure. Yeah. I mean, and these are interesting viewpoints, and certainly, capture my imagination and my interest. I often wonder in these types of scenarios as we play them out, though, is what parts of the market did you not consider in those theses, right? What impacts did we not consider? I think this is what makes the job of an economic forecaster so difficult. There are so many economic forecasters out there, and yet so few of them are ever very accurate in their ability to predict the future. And so, and the reason why is that we're talking about thousands of variables. So many different things go into how this machine operates. And I often wonder to myself, okay, like this sounds like a really good thesis. And trust me, I'm not trying to like downplay your viewpoint at all. But I often wonder to myself, what did we not consider as we
Mhm.
developed this idea? What parts of the market are we ignoring? What market participants are we unaware of that suddenly step into the market that we couldn't have seen coming until weeks into the event? What exogenous event are we not considering? Is there some kind of natural disaster that throws all of this off course? Or is there some positive event that we couldn't have anticipated? Is AI bigger than we expected? And as we go down and down the list, I often keep wondering to myself, how many other things did we not consider that have second order effects from the things I just mentioned?
Right.
And so then we get into this like game of chess where you can predict maybe the first 2-3 moves, but after that things become exponentially difficult to determine where this game is going.
Fair enough.